What's going on, guys? Peter Zane coming at you via MarketFi and Benzinga. I wanted to give you the market outlook via options. Last week was filled with earnings. We had a lot of big earnings come out. We had Amazon, we had Google, we had Apple, we had a ton of big names. We've got one big one left over is Priceline. That should be in 2 weeks. But overall, guys, I did tell you guys, be careful of trading in front of earnings. All right, it's much better risk reward if you're able to wait afterwards. Just like 2 weeks ago when we did play the Google, it just was very simple. Catch it on a late day move and watch the momentum. Same thing you could have done with Amazon as well. That thing moved, I think, about 8 to 10 points to the upside. Plenty of time for players to jump in to actually make the trade. Unfortunately, if you're watching the markets as a whole, it's been extremely choppy. None of the breakouts have been working. None of the breakdowns have been working. Most of the dip buys have been dead too. Financials have been lagging. And a lot of players out there considered Delta 1 traders have been having a tough time. Again, this is expected during earnings season. There's so many readjustments to stock buybacks, so many readjustments to new stock prices. It's very hard to tell where exactly the market is going, or where the momentum is, or the supply and demand, because it's been all thick of earnings. So what you need to do is you have to wait a little bit after earnings. Expectations for next week, honestly, would be last bit of retail buyers buy SPYs up to the 170, 171 area. Maybe fire it off via the text a little bit, and then maybe a tad bit of financial follow through, and then I would expect actually some sell off into the rest of the week. Volatility to come back. If you're a volatility player, be very careful being short volatility going into all-time highs here. VIX is at all-time low. If you want to play it, you might be able to dip by the VIX. We're at record low levels of the VIX, and this is not healthy for the markets. We need a little bit more consolidation in order to see follow through to the upside. But overall, a lot of options players, what they do is that they're jacking up both volatilities for calls and puts out there. This is when you know that a lot of people are buying calls because there's lots of upside possibly due to the breakout and due to the nature that we're at 170, 171 already. There's a lot of put buyers too because they want to be careful of the event of a giant flash crash down or possibly just a big gap down on a next day move. So again, guys, if you want best risk reward, I would honestly sit on your hands, let everything chill out a little bit. You have stocks up 300% these days, and you have got to calm down. Don't buy into this. Honestly, is pretty bad risk reward unless you get a really good dip. This is a very good way to trap the last dumb retail buyers into this big rally, this big bull rally, and then just flush them all out for the rest of the summer into a fade lower. This happened last year too. Before all the all the Europe worries were solved. It was just a lot of fading back and forth the entire summer until they announced that everything was okay. It was a big bull rally from there. But again, guys, you need to be careful out there. There are no catalysts out there. There's no reason for stocks to relatively be this high unless people actually sort out the decision making post earnings. Okay, so again, wait a little bit after the earnings. Let them play out. See where the momentum is. I would be sitting on the sidelines. I'd be careful. I would be slowly moving into some put positions probably for some protection if you have any long holdings. But again, guys, watch out there. You could see a last push up to 170, 171, and then just straight flushing to the downside. Again, this is Peter via Benzinga and MarketFi. Over and out.